2022 has been a terrible year for Tesla investors, with the stock falling almost 70% in 1 year. It has caused many investors to lose a ton of money. And with the recession expected to come this year, everyone is now wondering how much further can Tesla fall. Hint, it can fall a lot more. And analysts predicted that it could fall another 80%. I will try to answer the question as to whether you should buy now, hold, or sell before it gets a lot worse. And will Tesla even recover from all this crash? Alright, let's start right now. So, after falling 70% from its peak, is Tesla cheap now? Jim Cramer says that he likes the stock at the current price, which means that, the stock can fall a lot more. All jokes aside, I won't sugarcoat this and will just tell you upfront. 2023 and possibly even 2024 will be a terrible year for the company. And the simple reason is recession. With the yield curve being inverted for a while now, the US is very likely to enter into a recession soon. And it's not just the US. IMF also predicts that there will be a global recession soon. We all know that during recessions, people will be less willing to spend their money on fancy stuff like cars, which means that Tesla will be facing a lower demand this year. You can already see this happening in China, where the number of unsold cars are going up, and Tesla is now extending the Shanghai factory shutdown. As for how bad this recession will be, no one knows, but the Fed doesn't expect inflation to go back down till 2025. So the question is, has all this recession stuff been priced into the stock yet? Unfortunately, no. So far, the S&P 500 has fallen by 20%. But if you look at past bear markets, the market has declined by an average of negative 30%. In the worst case scenario, it has dropped almost 60% during the 2007 Great Financial Crisis. So the market still has a lot more room to fall. Also, even after the stock has fallen by so much, it is still above 30 PE ratio. Yes, you can say that, last time Tesla was at 30 PE ratio, it was making less cars, it was earning less money. But now it's earning more money. Therefore, it's a good buy at 30 PE. Yes, that's true, but we are entering a recession now. And a 30 PE ratio is actually considered quite high, especially when the company is not able to grow quickly now. If you look at other big automakers like Toyota, Ford, GM, their PE ratio is like 5 to 10. Yes, I know that Tesla is more than just a car company, but if you look at their revenue breakdown, 90% of their revenue comes from automotive sales, which makes it a car company. And all these automotive sales will fall during a recession. Also, let's not forget about Elon Musk, who keeps dumping his shares on us. Every time he sells, Tesla goes down by another 10%. And with Twitter still unprofitable, he may still continue to sell Tesla whenever he needs money. Let that sink in. Okay, jokes aside, it's easy to panic and feel depressed when all we see is the stock dropping 10% every other day. Trust me, I have a ton of Tesla stock, and every day I ask myself, have I made the right decision investing in the stock or not? But let's just take a step back and see the big picture. Overall, the entire market is down, not just Tesla. The reason Tesla is dropping like some meme stock is not because of Elon selling or anything. Yes, he's partly at fault, but it's also because Tesla reached meme stock territory in 2021. At the peak, the PE ratio was like over 1000, and it was worth more than 10 automakers combined, while not even delivering 1/10 of the cars. This crash, although it's painful, is a very much needed crash to bring the stock back down to normal valuations. Otherwise, how will it go to the moon if it is already on the moon? Quick pause. New year, new me. Webull has recently added 2 new features. The first feature is index options trading. So you can now trade options on your favorite index funds. The second feature is mutual funds trading, which means that now you can buy mutual funds and park your idle funds into low-risk funds to earn a yield. In their latest promo, Webull is giving out $120 cash voucher. To get it, all you need to do is deposit 2000 SGD, buy one US stock or an ETF with a minimum transaction of $100, subscribe to one mutual fund, and buy one US option, all while maintaining a $2,000 net account value for 30 days, and you will receive a $120 cash voucher reward. So if you are interested, you can sign up using my link down below. With that being said, let's get back to the video. So let's talk about the stuff that's causing this crash. In the short term, yes, there's a recession and car sales drop during a recession. But it's also true that recessions typically don't last long. The average recession length is about 10 months, with the worst being the Great Financial Crisis, which lasted 1.5 years. Also, yes, there will be lower demand for cars during recessions. But after the recession ends, the recovery is also quite fast, which means that all this will just be a short-term pain for Tesla. Second, Tesla is in a very good position to handle this recession. It has one of the highest operating margins compared to other automakers. It is sitting on a huge pile of cash, very little debt, and is at the top 2 position in terms of EV sales. Okay, I know that people will say that BYD is at the top and is eating up Tesla market shares. I've said this before. Market share is not the most important factor. Profitability is more important. If we talk about pure battery electric vehicles, Tesla is selling more cars than BYD, and it has higher net profit than BYD. Also, Tesla is already working on a budget model. Though with Elon being Elon, we can all count on him to delay the launch by another 2 to 3 years. So, in short, even though the recession is bad for Tesla, all these are just short-term stuff. The company's long-term fundamentals are still intact. But then, what about Elon crashing the stock by selling his shares? Okay, Elon has already said that he won't sell his shares within the next 1 to 2 years. Then all of us be like, sure or not? Can trust him or not? Personally, I don't think this is a big issue. If you want to pay him in shares, you can't just expect him to not sell his shares, right? Whatever he does with his shares is his problem. And even if he sells, it doesn't affect the fundamentals of the company at all. Though, here's a good news. Elon expects Twitter to break even by next year, which means that the chances of him selling more Tesla shares to save Twitter now will be low. So, should you continue holding or should you sell now? It depends. If you choose to buy now or keep the stock will continue to crash. If you choose to sell, the stock will go back up to the moon. So simple. Anyway, here's how you should look at this. All of us know that by 2030, there will be more EVs sold. If that is the case, which company would be in the best position to benefit from this? NIO, Ford, GM? They are barely getting started with EVs and are still losing money making EVs. Meanwhile, Tesla is about to announce their next factory, getting ready to release their Cybertruck, building more superchargers, improving their battery tech, and collecting even more data for their full self-driving. Okay, I know that the 70% crash looks bad. So here's a chart of Amazon, which crashed over 90% during the dot-com bubble. But if you zoom out, you will barely even notice the crash. I'm not saying Tesla will definitely 1000x like what Amazon did. For all we know, he has already damaged Tesla's reputation by talking nonsense on Twitter, and Tesla ends up becoming just another car company with a 5 to 10 PE ratio. I'm just saying, if you believe that Tesla will continue growing and improving, if you think that Tesla will be the leader in the EV space, then it will be reasonable to think that Tesla will recover from this crash and potentially go back up. But if you don't believe in Tesla, or if you can't handle this kind of volatility, maybe it's time to rethink why are you holding the stock at all. There are much safer stocks to invest in, like, I don't know, DBS. Another question is, why not sell now, wait for the stock to stop crashing, then only buy back in? Nobody knows where the stock will go in the short term. With Tesla being Tesla, it could easily crash another 50%, or it could easily 3x from here. Personally, I wouldn't recommend timing the market, as there are multiple studies which shows that why it's a bad idea. By timing the market, you will miss out on the best days in the market and will end up with a much lower return if you had just held on. So if you are a long-term investor, and by long-term investor, I mean someone who is investing for 20 years or more, not investing 1 year, 2 years, then sell the following year. That one is called trading, not investing. If you are a long-term investor, it's probably best to keep holding, continue dollar cost averaging, and have faith in the company that you are investing in. Anyway, that's all for this video. Hopefully, you find it useful. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.